Baer Pettit is Managing Director and Global Head of the Index Business at MSCI. He's joining us right now. Baer, thanks very much. Great to have you with us here. I understand you've been stuck in traffic. So,
thank you, Tim.
I mean, what can I say? Welcome to India. And welcome
well,
to
you know,
Mumbai.
That's Mumbai for you. Yes.
So what is the MSCI experience been? I mean, 10 years, long time. Things have changed. You've seen one big bull market. Another one, many believe, is underway.
Yes. Well, yes, there's sort of three benchmarks for me. I've personally been involved with the financial markets in India for about 30 years. I started when I was a student. Then the MSCI India Index, which you mentioned, has now been going for 20 years as part of the emerging markets. And as you say, we've had a business presence here in India for 10 years. And it's been a fantastic experience for us, both as a company, because of the great staff we have here serving our global business, and also because, the very attractive growth we've seen in the India market itself.
EPFR, which tracks flows into funds, said recently that allocations towards India are the highest that they've ever seen, or since they started tracking data, which was in 1996. Allocations towards global emerging market funds, which focus on India, right? I just want to ask you, you also have a sense of flows and overweights, etc., investor positioning. How long do you think these big overweights last? I mean, India, I think, is about 8% of the emerging market index, MSCI EM index. Currently, there's investors on an average have about 10-11% of their India in their portfolios. So that much is the overweight. Typically, how long do these last?
Yeah. Well, look, I think there's two things. There's the structural flows over time, which clearly have been increasing. And so I think what gets lost a little bit in the notion of the weight is the fact that the absolute dollar amount of money coming into emerging markets and into India has increased clearly a great deal over time. Now, India's weight in emerging markets is close to its all-time high. Look, I don't know. And then there's, of course, a marginal element, which can be an overweight or underweight point in time. And clearly, we've seen a big run-up in Indian equity markets this year. So I'm not sure how long the overweight position will continue, but what is clear is there's a strong story in Indian equities. The government appears to be pledged to reform, and international investors are interested. And there's a structural element there, which I think is probably more important than the marginal flows in or out point in time.
How do you decide if, since we're talking about India here, a market needs to have a higher weight?
Yes. Well, actually, there's a little bit of a misconception there. What we do is we reflect the larger market capitalization, and then the market capitalization in turn affects the weight. So we don't actually tweak the weights or adjust the weights in any way. What we do is we try to reflect the reality of the market. So insofar as the weight of India has gone up, it's because India has performed better as a market, and also it has met various eligibility criteria which we have in place beyond just market capitalization.
Yes, you provide the index, you're not investing. So my mistake. As companies do well, market cap increases.
No problem.
Weight obviously will go up. How is the MSCI index different from the Nifty? I mean, why should investors follow the MSCI India index and not the Nifty? Just taking the Nifty as an example. Yes.
Well, of course, the main difference is that the MSCI International Equity Series, including the MSCI India component, was built for international investors. So, for example, there could be, if there's a limit for foreign investors to be able to purchase a certain stock, then that will be reflected in our index, whereas for a domestic investor it might not be. So really, MSCI India is the way that the world outside India, that international investors look at the Indian market, and as such, I guess it's an important mirror to what's going on in Indian equity capital markets.
Right. And, you know, because of the rules here, FII, FDI, caps here, recently, I guess you've been throwing out stocks rather than including stocks, right? I mean, you've been, of course, replacing stocks, but a lot of banks, for example, where the limit is reached or foreigners can't buy more, I mean, because of the way the index is built,
yes,
as you said, for international investors, I mean, those stocks get deleted. They exit, right?
Exactly. Exactly. So if international investors are no longer able to purchase a company for whatever reason, and there could be a number of reasons why that occurs, they would be deleted from the index. You know, on the other hand, you know, at the margin, we're more adding companies than deleting them. And notably, you know, quite a large number of companies entered the MSCI India small cap index during the most recent quarterly rebalancing.
Okay. Just one question about a specific company, HDFC Bank, a lot of interest here, second largest private sector bank in the country.
Yes.
Now, we understand that the, you know, the
Yes.
government committee responsible for allowing or disallowing higher FI limit is meeting on Friday, and it's going to take up the case of HDFC Bank. Now, if HDFC, if the higher limit were to be allowed, I mean, how would you reflect the change in the next revision of the MSCI list, or you would do that immediately?
I believe we would do it in the next quarterly revision. I might have to check the methodology book myself, but in any case, we would make a public announcement, which would be very transparent for the entire market, and also, you know, the general approach is to try to reflect things promptly in our indexes without creating confusion or volatility in the markets.
Got that. Thanks very much for joining us, Baer. Great to have you with us here. I do hope that you don't have to travel far distances from where you are now.
Thank you.
Next time you're here, please do drop into our studios. We'll be more than happy to host you. Thank you very much.
Always a pleasure to travel in Mumbai. Thank you very much. Thank you.